Well, we had the rand plunge 2% yesterday to 684.90 against the dollar, trading at its weakest it's been in 8 sessions. Further weakness filtering through this morning. We're sitting at around about 690 at this stage. And once again, it's really all about events externally, right? Where we've got the Europe debt negotiations at the forefront of it all.
Morning, Alishia. Yes, all factors seem to be stacked against the rand yesterday. Early in the morning, we had inflation data that came out of China that was higher than expected and sparked concerns that the monetary authorities in China might continue to tighten policy in that country. We've seen inflation in China run ahead quite significantly, and the Central Bank of China has raised the benchmark interest rate at least 3 times this year, and there are concerns that they could continue to do so, and that may have growth consequences for the Chinese economy and of course global growth. Then secondly, as you mentioned, there are also those European debt crisis coming back into the fore, this time with Italy at the center, concerns that that country may also need a bailout. So that of course all played into a quite sharp spike in global risk aversion, and of course the rand, as with most other risky assets, took quite a hit yesterday.
Of course the rand tracking the euro for the most part, the euro at 139 coming under massive selling pressure around speculation surrounding the ECB allowing certain Greek debt to default at this stage, and then Italy feeling contagion effects as well. To what extent are you expecting the sell-off on the euro to continue?
Well, Alishia, our long-term view has always been that the European sovereign debt crisis was a systemic one and not just related specifically to Greece. So our view has always been that the euro will be pulled down by these debt crises as they continue to flare up in one country after another. So we'd be looking for the euro to still head down to about 120 by the end of this year. So certainly the sell-off in the euro will continue for as long as this larger crisis remains unresolved.
Well, we'll be watching for developments there. 120, pretty far off from where we are at this stage. In the meantime, risk off trade is what they're calling it, Nomvuyo, where there's immense risk in the system. Investors looking towards the dollar as opposed to the euro. But are we not undermining risks to the dollar at this stage and so underestimating the risks to stability in dollar rand at this stage?
That certainly is a good argument, Alishia. At the moment, the dollar does seem to be benefiting from its safe haven status, and that does tend to happen in times of great global uncertainty, as we're seeing now. But of course, the dollar, or the US economy, there are still risks in that economy. We have that ongoing crisis, one could call it, in the US over the debt ceiling, which is set to be reached quite soon, and still no resolution over that matter. Then of course we had very shocking job numbers that came out on Friday, just underscoring the extent to which the US recovery is still battling to get some strong traction going. So there certainly are risks to the US economy that should be playing out in the dollar, but in the short term I think the dollar is benefiting from its safe haven status, and that does tend to happen at times like this.
We've got the Fed minutes for the June meeting being released a little later this afternoon. What specifically will you be tuned to when it comes to that release?
Well, the minutes are expected to largely just back up what the chairman, Ben Bernanke, said at the press conference that was held after the meeting. If you recall, the Fed downgraded its growth outlook for this year and next year, also revised up its inflation outlook, but did indicate that the chances of further quantitative easing were quite slim, and that there would have to be quite a significant slowdown in economic activity for them to start to consider those factors. So I think those would all be issues that one would look for in the minutes to see whether all members were united in this view.
Where we've got these external factors at play and impacting on the local units movement, we've got data out today, manufacturing data being expected, and this in a context where we've got strike activity just seeming to be heightening as well. How's that playing into risk aversion and adding to the fears that are already out there?
Well, certainly the rand is at the mercy of global currents, as it always is. We are expecting manufacturing data out later today. We're expecting to see a bit of a recovery after output production slowed quite dramatically in April. Slowed largely a result in the car manufacturing sector, and that was largely a result of shortages that are linked to the earlier natural disaster that we saw in Japan. So some of that we're hoping was alleviated in May, but of course there's downside risk related to the fact that there are a lot of public holidays in that month. In addition, we've also seen the PMI slipping quite significantly since the peak it reached in March this year. So of course, if there is an unexpectedly large or positive recovery in the manufacturing sector, that could be positive for the rand and play into positive rand sentiment. But we think that the downside risks for the rand are preeminent today, particularly in light of ongoing strike activity and in an atmosphere of global risk aversion. Ongoing strike activity, particularly if it becomes violent, could well put investors off.